Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, it is Friday the 11th, and we're at day 10 of the government shutdown. And, you know, we're just playing a waiting game right now, just seeing what's going to happen with the three-ring circus that is our federal government between the House and the Senate and the President, and what's going to be happening here with this government shutdown, and most importantly, how things are going to shake out for the October 17th deadline of where the federal government runs out of money and we need to begin borrowing again, and we need the approval of Congress to actually borrow so we can pay our bills. So all eyes are really focused on that and to see how that's really going to shake up or shake out here, and if it's really going to be a major event. We haven't seen a whole lot of economic data here this week, and actually interest rates finished the week slightly worse, not a big deal, but slightly worse than where they ended last week. Primarily due to what happened yesterday. There was some thought that, hey, maybe there's going to be some progress made and things are getting close. It didn't actually materialize, but stocks had their largest one-day rally of the year. They really, S&P 500 increased considerably. That caused some pressure with mortgage-backed securities. Now today, we are seeing mortgage-backed securities having a little bit of support. So it didn't look like this was a long-lived thing, and so maybe we might see interest rates stabilize here, and it looks like that's happening. So that's good. But again, everything is going to be focused on October 17th, so we've got 1 week here to see how all this shakes out, and the market is just playing a waiting game. There's been really no economic data released because federal government's closed, and they're the ones that release all this. So nothing really on that front of major importance. We did see the weekly jobless claims, which did get released. That showed a really large increase in unemployment claims, about 66,000, which was considerable. Expectations were for only about 318,000 jobless claims. Actually, it came in at 374, so big increase there. And last month, it was only about 308. That was, though, shrugged off a little bit because I guess California had some issues on how they reported, and due to the fact of the shutdown and people not being furloughed and filing for some claims there. So we also did see or hear that on Wednesday, the president did actually nominate Janet Yellen, which is one of the current Fed members, to be the next Fed chairperson. I guess we won't be able to say chairman anymore, and she's the first woman chairperson in the Fed's 100-year history, so that's, you know, a pretty historical event. But the markets did like that because people know what to expect for Janet Yellen. She's been pretty dovish in terms of not wanting to make major changes, and that should bode well with what's happening right now in Congress and all the instability there of keeping tapering going probably until 2014. So the markets did like that. So we'll let you know what happens in the next week. Here's, you know, again, the general trend. My guess is that once Congress and the president hopefully come to some agreement regarding the ceiling and regarding getting the government back open again, we probably will see interest rates suffer a little bit. I don't think, at least at this particular point in time, that that's going to be a major movement, just because of all this arm wrestling and political wrangling is not very good for the economy, is going to cause a drag, and it looks like the tapering will continue due to all this. So while interest rates might suffer a bit, maybe between now and the end of the year, we might still continue to see a little bit of a rally. Who knows? We'll see, just because, again, we saw earlier in the year interest rates really suffer over worries that the tapering would stop pretty quickly, that we were getting towards the very end of the end. Now that may not be the case, and so you know, we might see interest rates improve. So that's what's going on with the economy. Just playing the waiting game here. We'll let you know what happens next week once, hopefully, this is resolved. My guess is that at the 11th hour, we'll probably see some type of deal made, and let's hope that happens, because we've never really entered the realm of the government not being able to raise that debt ceiling, and so that wouldn't really be fun to see how that all plays out. Hope you guys are doing great. If you have any questions, please feel free to give me a call. If you're working this weekend, so are we. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.